Good evening, ladies and gentlemen. Welcome to our investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking. We're happy to bring you yet another installment of our weekly upload. Today's video will be focused on Seprod Limited and Future Energy Source Company Limited, Fesco. We're excited to discuss both companies today on our panel. Most of you recognize Brandon Thomas, a familiar face and voice on our investor series. Welcome, Brandon.
Hey, thanks, Dan.
Glad to have you back. If you're a fan of the content, then don't forget to subscribe. Also hit the bell to stay up to date with the channel. We upload content just like this every week. If you want to embark on your very first investment journey, then you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. Okay, so as we said, today we're going to look at Seprod and Fesco. First up, I'm going to let Brandon go with Fesco.
All right, thanks again, Dan. So with Fesco, I'm sure everybody has been seeing, the gas stations, especially the more popular one on the Mandela Highway. You've been seeing how they've been expanding, very aggressively. And I want to get into the numbers to kind of show that and to break it down. So Fesco in the 9 months as at December of 2022 would have recorded revenues of over $20 billion. That led to a net profit of $434 million. And specifically in that December quarter, they would have recorded their best quarter ever. Have been expanding really nicely, which I'll get into more. And that would have accounted for, their really impressive numbers. We see where their revenue was $20 billion. That's compared to last year, which was $8 billion. Their gross profitability was $646 million compared to $245 million. So we see where, they're aggressively growing that top line as well as the bottom line, which grew by 154% from $170 million to $434 million. And we see where that has led to a PE of roughly 22.5 times and at a stock price of $4.66. So still trading just a little bit rich, but with the growth that is expected over the coming quarters, I think Fesco is still a very good option for your portfolio. It gives you a lot of exposure to an industry that is not, widely available on the market. We recently just saw, Regency Petroleum listing, but this is a good company to add to your portfolio. Moving on to the next slide, we see the quarterly profit movements, and you see that nice, upward trend of profitability over the last quarters. Now, in Q1 of 2022, would have seen a very great quarter in that period. That was coinciding with the time during the pandemic where gas prices were pretty high, and they benefited from that. But even post that period, when gas prices begin to come down, because they have been expanding, opening a new location in 2 rural areas, they would have seen a ballooning of their revenue over that period of time. Moving on to the next slide, we see the share price. This is a company, for perspective, that IPO'd at 80 cents and went up to a high of $8 in March of last year. And that has begun to trend down since, and self-corrected in terms of their valuation. But as I said, at these prices, Fesco to me is at a really good price to be bought at right now. So I just want to say that Fesco is growing nicely into their valuation. They're aggressively building out their network of stations. They added 2 last year. And on a recent interview with, the CEO, Jeremy Barnes, he spoke to the fact that they'll be adding 2 more, by December of this year. He also spoke to the fact that they should be entering into the LPG or cooking gas space within the coming months. And they have made, a lot of, investment in that area to build out, their cylinders and to really make a proper launch into that area. Last year, they did 2 bonds, one for $1 billion and one for $700 million. And that is in an effort to both expand the network of stations and to go into cooking gas. So all in all, I think Fesco is heading in the right direction. They are increasing very aggressively their number of stations while also aggressively improving their profitability. I think they're very efficient. Anybody that was gone to the Fesco Beachwood or Mandela would have seen how, despite the crowd, the lines move pretty fast. And they've recently launched a 93 Futron oil, which is for, the high-end, high-performance vehicles. And I think that is a big hit so far, especially according to Mr. Barnes himself. So I think they're heading in the right direction. And as I mentioned before, based on current valuation, we don't really buy stocks where they are now, but where they're going to be. And if this company continues to execute at this level, I think they'll not only grow into this valuation, but they'll far surpass, this current PE by next quarter, and especially over the next 2 quarters. You have any thoughts, Dan?
Yeah, thanks for that, Brandon. I think you're spot on. I mean, as Jamaica is the poster child to the IMF, I think of Fesco as the poster child to the Junior Stock Exchange and what a good IPO should be. Here's a company that came out, like you said, at roughly 81 cents. I personally couldn't get any until it was at $1.50, bought quite a bit at $1.50. I exited at $3.50, feeling very happy within 6 months. And here the stock is at $4 plus. It's trading a little richly, like you said, at 22 times PE in the junior market, where I like to think of the average is 16 times. But what I love about Fesco is, I remember the prospectus very clearly and their forecast. It was a nice conservative forecast. And we like companies that are well managed, put out responsible prospectuses and then knock it out of the park. They have far exceeded their profit forecast in that prospectus, and it just looks like they have good room for growth by adding new lines. As you said, we talked about the 93 fuel. They're trying to build out the LPG line now of cooking gas, adding more locations. Great management team. Every time I talk to Hugh Core or Jeremy, I'm just really impressed with the team there. And these guys are just great guys doing a great job with a great company. And so we tip our hats off to you guys for the performance that you've delivered today. And I expect them to continue growing. So I think it's a good buy for a long-term hold. I think it's a great company. They're well positioned, and I think it's just a great company. And we really thank these guys for delivering a great IPO. In recent times, we've not seeing this. Companies are putting out forecasts that they don't deliver on, and that hurts the confidence in the market. So, great company. I agree with you wholeheartedly. I think this is a good buy for the medium to long term. All right, thanks for that. Up next, we want to look at Seprod. Seprod's a main market company, and we just saw their unaudited results for the full year December 22 come out, and it's whopping results, of course, also driven by the acquisition of the Bryden Group. We see sales up to $79.7 billion, 81.5% increase, flows right through to the gross profit, growing by roughly 90%, up to $20.6 billion. They've taken on some debt to take that acquisition, so finance costs are up to $1.9 billion, up 63%, but the net profit's up 108% to $4.8 billion, and that flows right through to the profit attributable to shareholders of $2.95 billion, up 48% over the prior year. So generally great result from Seprod, driven primarily by the acquisition of the Bryden Group. Also, we've seen 25% growth in their export sales in addition of a few new product lines. But all in all, great performance from Seprod. They've also, because of that acquisition, grown their total assets to $87.5 billion, up 86%. They've grown their shareholders' equity. They've grown their shareholders' equity up to $28 billion. That's a 20% increase in their shareholders' equity. So all in all, I think this acquisition is adding value to the bottom line. Just a few concerns. The balance sheet has gotten quite large with total assets of $87.5 billion. We see inventory up to $24 billion, which is about 110 days of inventories. And we see receivables up to $18.3 billion, about 80 days of receivables. So, just things to watch out for. But all in all, I think it's a great business, hard assets, and this will be a good buy for folks who want to get into the manufacturing distribution space. Business that has good hard assets, is obviously poised for growth, and they really do deliver. Over at Seprod, great management team in the form of Richard Pandui, great board led by P.B. Scott. It really is hard to bet against this team. I remember in 2018, Brandon, when the Face Group was selling some of the shares, trying to raise about $2.2 billion, and they were selling the shares at $23.99. That was March 2018. Here we are 5 years later, stock price is now up 175% to approximately $67. It is a PE of 16.62 times, so again, a little bit rich. In the main market, that's currently about 10 times. I personally think by the end of the year, we'll see the main market PE coming back up to about 12 times. So they need to grow their earnings to $4 billion, their trailing earnings, to justify this valuation. They're currently at $2.9 billion of trailing earnings, but in the last quarter alone, they did do $1.2 billion in earnings. So I think they're on that run rate. We just need to watch them for the next 2-3 quarters, but it's hard to get bet against Seprod. Again, as a business, it's generating about $1.2 billion in cash per year, $2.7 billion before taxes, good EBITDA of about $6 billion. So even though they have actually $8 billion EBITDA, so even though they have about $26.5 billion of debt, that's about 3.5 times. So I don't think of them as being over leveraged. They're just using their debt responsibly to help grow the business. We also see them bouncing back strong from the big fire they had. And so, again, I expect the earnings to continue to improve, to do about $1 billion a quarter or higher going forward, therefore justifying this valuation. Next slide, again, shows profitability. And again, we saw fourth quarter 21 as low as $291 million. That's the quarter when they took the hit, from the fire. They also had some third-party costs that they were incurring as they had to find a separate logistics place for their warehousing. That's being sorted out now. They're moving over to Marcus Garvey, and we see those costs now going away. So I do expect the profitability to be getting to $1 billion a quarter, and then that would certainly justify the valuation. Next slide shows the movement in the stock price. So it's been, fairly flat in the last 12 months. But again, this is coming from, $26 5 years ago. I mean, you're investing in companies like Seprod, JMB, NCB, the big hard asset banks, the big larger market caps. You really do have to be thinking 3 to 5 years as your investment horizon. And if you can put your money in a stock that gives you 100% return over 5 years, in this case, 175% over 5 years, that's obviously a good stock. So for me, next 5 years, I would anticipate for another 100% growth in Seprod. And for that reason, from my point of view, it's a good recommendation if you want to buy into a business that's focused on growth, growing their export business, good hard assets, so you're not paying a ridiculous price from a price to book perspective, then Seprod's a good choice for you. Brandon, what about your thoughts?
I couldn't agree more. I love that you touched on the move, logistically to Marcus Garvey. In a recent article, Richard Panduri said that should save them roughly $250 million annually. So that will definitely cause a lot more efficiency in how they run, and as well as they're going to be launching new products in the coming months. An article came out just this morning about that, speaking to the fact that they're launching new products like almond milk and other things along those lines, and that should bring about more revenue. And I want to kind of touch on A.S. Bryden. I don't think people realize how massive of a company it is. To pull this off, this acquisition is really impressive. My friends in Trinidad speak to the fact that A.S. Bryden is the largest, distribution company there locally. They distribute everything from, household products, food products, all the way up to construction equipment. And they are a very, very large player in the space. And for Seprod to now acquire them, that is a massive deal for this company. They spoke to last year that A.S. Bryden is looking to do an IPO here locally, which should unlock even more value. And I'd love, if Seprod would include some sort of, deal for existing shareholders that, you get a part of the deal, like some A.S. Bryden shares when they IPO. That would unlock even more value for us shareholders. And it is something that I have been recommending. Seprod is a stock that I've been recommending for my clients, and I will continue to recommend. I do believe that, with this acquisition and their current plans, that they will grow aggressively over the coming quarters. So Seprod is a buy for me, and as I said, Dan, I couldn't agree more with their assessment.
Yep, thanks for that. So I think we're aligned on that. I'm big on understanding the businesses, understanding management, the strategic vision, and the talent. And I think Seprod really has all of that. For that reason, I'm not a big fan of cryptocurrency because you don't know what's behind it. I don't see financial results. I don't get to talk to management. I don't know what direction they're taking the business. I'm into, businesses that we can talk to management, understand what they're doing, analyze the performance, see the track record, and therefore make a, good analysis. And so for me, Seprod and Fesco both tick those boxes and are great buys for you guys out there. Well, that's it for our discussions. I'd like to thank our viewers for tuning in. Your support is always appreciated. Big thanks to Brandon Thomas, as usual, for his great support and insight. Thanks, Brandon.
Thanks, Dan.
If you're curious about our updates of our virtual forum, then find us on social media. We share our live stream dates and upcoming guests on our social media pages. So give us a follow and stay on top of all things forum related. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive all notifications. Keep safe, folks, and remember, wise investors, slow and steady wins the race. Goodbye.